This is Rick Rule for Rule Investment Media, conducting interviews for the Mining Journal Select Conference in London, July 1st or 2nd. The point of these interviews is to allow you, the attendee, to get to know the speakers and the exhibitors ahead of time so that you can allocate both your time and capital at the conference more efficiently. Today's interview is with a friend of mine of some long standing, Walter Coles, who is CEO of Skeena. Just to let the record show, I am a shareholder of Skeena, so keep in mind any potential conflicts of interest. Walter, first of all, thank you for your efforts on behalf of shareholders, myself in particular, and thank you too for your sponsorship of the Mining Journal Select Conference in London.
It's great to be a participant in this conference. Really excited about it. It's great to see you. It's been a couple years, so this is a wonderful excuse to catch up and talk about what our company's been up to.
Let's begin with you. Tell us something about your background, how you came to be CEO of Skeena, and to be impertinent, why somebody should care about the answers you give to the questions that follow.
Yeah, I started my career after university in New York. I worked at UBS as a credit analyst. I was in the high yield department, a high yield research analyst. I spent 8 years at UBS before I left to start a mining company with my father based on family lands we had with a uranium deposit. Unfortunately, I learned the hard way how difficult it is to permit a project in the East Coast of the United States. We went all the way to the United States Supreme Court fighting for a permit. Unfortunately, didn't succeed. So I decided for my next venture, if I was going to be involved in mining, I would go to an area where if you find a deposit, you can get it permitted, and that's in Western Canada. So that's how I got involved with Skeena. Almost 10 years now at Skeena, pushing this forward. I think that my background as a credit analyst has come to be very helpful because we have just been going through project financing, and of course there's a debt component to that.
So let's talk about the project. This project has had very long history, a history that makes me smile because I had the good fortune to be involved financially, at least even in the discovery. Tell us something about the history of the deposit, and then tell us about your efforts to rehabilitate and restore this really, truly legendary mine.
Well said. It was the highest grade underground gold mine in the world when it was operating. It operated from 1994 until 2008, produced 3.3 million ounces of gold and an astounding 160 million ounces of silver. You would probably say it was much more of a silver mine than it was a gold mine. The average grade on the gold was 45 grams a ton. The average grade on the silver was 2,200 grams per ton, and every ton had both of those in it. So that's why it's such a legendary mine. It was shut down in the first quarter of 2008, right in the middle of the global financial crisis. Barrick was the operator. They put the asset into reclamation, and basically they kind of forgot about it. And at the time, I was partnered with Ron Netolitzky. He was chairman, I was CEO. And our idea was, let's not try to do grassroots exploration because that's pretty hard. And it's lower odds than the strategy we came up with, which was to try to go acquire past producing mines, because the best place to find a new mine, everybody knows, is in the shadow of the headframe. And that was exactly our idea. It was get a hold of assets that had been closed down and sort of re-look at them. Ron was credited with the original discovery of Eskay, and he swore to me. He's like, I promise you, there's more material still there. And you know what? He was right, because after a few years of exploration, we've come out with a resource that right now is over 5 million ounces of gold equivalent. So,
at approximately what grade?
Yeah, it's an open pit grade of just under 4 grams per ton,
which is obviously one of the highest open pit grades on the planet. There's been
yes.
some knock on the material in terms of the metallurgy. Perhaps you could talk about your strategy for dealing with that.
Yeah, so it goes back to the old the past history of Eskay when they were mining a horizon called the Contact Mudstone, which is where you had these incredible grades, 100 grams of gold, 3,000 grams of silver. But when you have those super high grades, you would also have some deleterious elements like arsenic mixed in, and there's a correlation between the grade and the amount of deleterious elements. Most of that super high grade material was mined out, And we're mainly mining the horizon that was just underneath the contact mudstone. It's called the rhyolite horizon. And that's where the grades average, in this sort of 3 to 8 gram range, which is too low when you're doing underground mining. But the difference is we're doing open pit. So we're able to drop the cutoff much lower and mine that material that didn't have the deleterious elements in it. There's still a little bit, but we've had many discussions with smelters. I mean, we probably talked to 30 smelters around the world, and they are, I would say they're most excited about the silver content that we have, because the silver market right now, I think most people know, has moved into a heavy deficit, and we have a lot of silver in our concentrate, which makes our concentrate very, very attractive to buyers.
I don't think a discussion of Northwest BC is complete without a discussion of your host communities. I've had the good fortune personally of knowing the Tahltan, and in particular Jerry Asp, going back to 1984. So if you could talk something about your host community and your relationships with all the First Nations, but in particular the Tahltan.
Yeah, we're lucky to be in Tahltan territory because they have a tremendous amount of experience and history with mining. I've had the president of the Tahltan Nation say to me that they are a mining nation, that they have been mining obsidian for thousands of years. So it's in their blood. They're a commercial group, and they look at mining as an integral part of the economies of the local communities there. We view the Tahltan as a partnership with us on this project. We have Tahltan employees in the company and high profile leadership positions. And so we're working together to bring this project through permitting and into production.
Normally in discussions like this, pardon me, I talk about forward-facing catalysts, but you have a catalyst in the rearview mirror. Perhaps you could talk about that catalyst, the impact on the company, and the potential impact on shareholders.
Yes, thanks for bringing that up. Yesterday, we announced a project financing that was over 1 billion Canadian dollars. That included a 100 million US equity investment done at a premium to market. We are now happy to say that we're fully funded. That package comprised 4 different components. There was a 100 million US equity investment. There's a 200 million US stream component, of which we can buy back 2/3 of that. And then there is a 350 million senior secured debt facility and a 100 million US cost overrun facility. The important point on the senior secured debt and the cost overrun facility is we pay a 1% standby fee to have that money committed to us, but we can walk away from it at any time. There's 0 break fee on that. So look, it's 13% cost of capital on the senior secured debt and the cost overrun. But if any point over the next 18 months, I find a lower cost of capital, we can walk away from that debt. But in the meanwhile, I can say project's fully funded.
Fully funded. Are you permitted?
We're partly committed. As a brownfield project, we do have existing permits. For instance, the tailings facility is fully permitted and ready to go. The twist here is that we're moving from an underground to an open pit operation. And so we do have to redo the environmental assessment certification as part of that change to an open pit operation. We expect to receive the environmental assessment certificate at some point in the summer of 2025, so about 12 months away.
And when that happens, that really makes the project shovel ready. Am I correct, or are there other challenges between here and construction?
No, that's true, except that our project financiers have made the stream funding available to us on receipt of something called the bulk technical sample permit, which we expect to receive later this summer. That allows us to do some of the construction ahead of receiving final permits and accelerate our timeline to production by 1 year.
One could assume that a group putting up $1 billion has done some fairly extensive due diligence. Can you tell us who the lead financiers in each component of the financing were?
The beauty here is we have one counterparty. It's Orion Resource Partners, and they are providing the equity, the stream, the debt, and the cost overrun. I love the fact that they are now our biggest shareholder. They own 15.5% of the company. And that aligns, like, I love it when your debt provider he's your largest equity shareholder as well, because that creates an alignment of stakeholder interest. I should also add that we did have more than one $1 billion plus proposal on the table. Like, we ran a very competitive process, and that allowed us to achieve what I consider to be, that competitive tension. We use that to drive down the cost of capital on this project financing package. And what I think we've released to the market yesterday is I think a very innovative and comprehensive, fully baked package.
Well, I can confirm that at 13% cost of capital, you're 250 to 300 basis points below market. So,
Well, and also
excellent job.
We're in a high tax jurisdiction. So, I mean, British Columbia is 37% total tax on our project. So when you take that 13% and you back out the after-tax cost of that funding, it's really closer to 8%. And I'd add one more thing about Eskay. At $2,300 gold, our payback period on this project on CapEx is 0.9 years. So we generate over 800 million Canadian dollars of after-tax funding in the very first year. So it's an unusual project in that regard.
Walter, to the extent that attendees want to learn more about Skeena before the conference, who can they contact and how do they contact that person?
I would invite any of your listeners to contact me. They could, I'm happy to give them my cell phone. Maybe start with my email address. It's wcoles@skeenaresources.com.
And for the record, that's COLES.
Yes, sir.
Walter, thank you for your efforts on behalf of shareholders, as I say, specifically myself. And thank you, too, for your sponsorship and support of the Mining Journal Select Conference. It'll be a pleasure to host you in London.
Thank you. I look forward to it.